Hi everyone, welcome to WIC channel. My name is Rifad. So as you guys can see today, I have a little friend over here named Ralph. He decided to join us. Say hi. Hello. How are you? So he decided to join because today's talk I want to talk about is a recent IPO that happened was Chewy. So you know what? You can head over and after I explain to you why little doggy is here, he can go. Let me just put him down here. There we go. So Chewy is pretty much it's a recent IPO that happened. Like I said, it's an online retailer for like Amazon.com, but mainly for pets, for your home domestic pets. You know, from like to buy from dog food, cat food, treats, to like toys and all kinds of stuff. It's that kind of company, right? And it's all online. So that's the reason I thought it would be cool to have my dog over there. So you know, I thought it would be cool to do a video because kind of a hype around that. So you know, let's kind of show you guys, and let's start out by giving that my positive about the stock, and also a couple of maybe some negative points I had, and finish off with kind of my opinion, I would say. So start, you know, let's start with the positive. I would say the positive is the sales have been increasing at tremendous levels for the recent years. As you guys can see in the mainly from year over year, you know, it almost went from $1.4 billion more. So right now they're hitting $3.5 billion in sales, which is tremendously good because that's something we don't even see because year over year they're growing. That shows there's demands for pet supplies online to buying stuff for your dog or for your domestic pet, you know, your family member stuff that's it's not there. So there is a need for it, and we can see that through that, right? And if you compare to recent IPOs, because there's recent IPOs that occurred, so we can compare their sales to recent IPOs. Lyft was IPO'd and they're making $2.16 billion in sales. Pinterest, it's 755 million. Then you have Beyond Meat, which is 87 million. So you guys can see is I know that you're gonna say to me the different industry, right? I totally agree with you, but I'm just gonna go ahead and say like it's not something to ignore in a way because a company that's making $3.5 billion in sales, it's important and it's a huge that's still a huge amount of chunk of sales, and compared to recent IPOs that happened, you can say that they're in the top. And also you guys can see is there's a chart that kind of shows how was the pet industry during recession times, because during 2008, 2009 and 2010 they still increased over year when everything was dropping, I would say. So that kind of shows you that even during recession times, people still care about buying stuff for their pets, care about their pets, want to take care of their pets. So you guys can see that there's a still need and a demand for that. So I would not say it's not recession proof, but overall, it's kind of there's a good buffer. I would say that it's kind of an okay area. Continuing is losses. Losses have reduced. That I noticed also because they went from $338 million in losses to 267 in loss. That's kind of showing that it went down. That's great. Another factor which I liked is that the CEO previously worked at Amazon. He worked from 2013 to 2017 as a director and as a general manager. Um, and that you can see is why I would say that's important is because that comes to my next point is the company looks a lot like Amazon, which is customer centric. We do not have a lot of companies like that, like in circulation, that is really customer centric. They care about their customers and grow with their customers and keep them in their ecosystem. And I'm repeating again, a customer, but that's vital for your survival of your business. Am I correct? And them they're doing so by partnering up with local artists that go into the homes and do a drawing of your pet, which is interesting because that causes a connection. So every time you see that drawing of your painting of your pet, you instantly link it with Chewy and the great experience you had with them. So you must not forget that they're creating a link with that. Another thing they're doing is sending cards. If your pet dies, they send a card, and like that kind of things. They care. So it's kind of showing they keep an ecosystem, and also they have another motto in the company that says they go above and beyond for their clients. They even spend half an hour on the phone to make sure their client is happy, because a happy client returns back. Even if they pay a bit extra, they don't mind. They just want to stay in the ecosystem. They're happy. So that's very important to make your client happy. Take a loss now, but in the long term, you'll win if you keep your clients happy. Their gross margin have been increasing. Chewy also, I would say, is like a SaaS company because of the subscription base, because of their, like a Prime, right? You're paying monthly for a certain like Prime membership, like Amazon, they bring up membership for them, and doing so, it's kind of like a SaaS. And because of that, they were able to generate $3.5 billion in sales with just $77 million in capital investment. So it's that kind of shows you that they have to make a little investment, but they can generate a lot of capital or make sales overall because of the small things. That resumes a bit the positive I had about them. Now going to the negative factors, I would say, is one of the huge pullback. I would say that the stock didn't explode. It went higher than the IPO. He could have gone higher, like Beyond Meat and everything, but it didn't. One of the main reason is, I would say, is the pullback of the dual class, because PetSmart still owns 77% of voting power with the Class B. And that is kind of a factor that people do not like Snap did it, but it is starting to become more and more popular, that method of doing stuff. But still, that is still right now, I would say, in the area that people are a bit more reluctant. But in the recent CEO, he did like an interview, and he told that PetSmart and the investment firm that owns that, they are aligned with the long-term vision, because they see it as having like two dual classes lets them focus long-term, and PetSmart and the investment firm have the same vision, and they're both aligned. So they're able to grow the company long term with not necessarily sacrificing for short term. That's kind of their say on that, I would say. And that's what he's saying. But that also another downside of that having classes is they cannot be part of the S&P 500, S&P mid cap 400, S&P small cap 600, Russell 2000, because those indexes excludes companies that has multi-classes shares. So that kind of shows that that's kind of a downside, because now we're going to move into a new era, even that people are going to invest more into indexes than individual stocks, and doing so, Chewy is kind of putting themselves in a corner, saying like they won't have access to those indexes, buying into them. So that means the normal individual buying indexes and will not have access into the individual stock, which is Chewy. So they're kind of putting them in a corner, but that kind of we'll see. But we never know that they might change the rules, right? Because that happened in the Dow Jones index, because they did the change for Warren Buffett, Berkshire Hathaway, because they have two classes. Continuing, their high sales to price ratio is 3.9, which is kind of high. Liabilities was asset. I put a kind of show you guys to show you guys over here that is growing, which I do not like a lot, because when you see their total assets around for this year, it's around 542 million. And the total liabilities at 878 million, and it's growing. It grew almost over 300 million while this thing grows. So it's that kind of I would say a kind of a icky point. Them is like gathering a lot of liabilities, so it's kind of a not good thing. Continuing is also they are at the current price. I would say the company has to grow their sales around 15% year over year to justify it minimally, because I will drop kind of the sources down below. They can kind of explain a good chart on how the person came to calculation 15%, but it makes sense, because ordering with the high sales to price and the stock price exploding after the IPO shows that they have to increase it 15% year over year to kind of justify it. And doing so because the stock price is even going to go higher, right? So they keep on. It's like a never-ending wheel. So they have to keep on going up. Will they be able to achieve it? I don't know. It's a good guess. They've been doing it wonderfully recently, so I mean, I don't see why not. But yeah. So finish off with my kind of final thought, I would say. Final thought, I think, is pets are more and more going into places where we treat them like family. We want to give them the best food. They want to make sure they're well treated. They're kind of part of the family. Like you can see my dog, and like I have a cat, and my cat, I would love to have her in this segment, but you know, cats don't really like to stay and show, so they run away. They're on a small corner. But overall, want to make sure that the good food, they're taken care of, they're part of the family, and you really get attached to. So they become more and more, like I'm repeating again, families. So you want to make sure they're well treated. So that's kind of showing you that the reason, even a recession, they kind of a bit protected against that. And I think more and more people are going to go online to buy stuff. And Chewy, which is really focused on customer centric company, which you don't see many of them. So that kind of shows you that they're really focused long term, satisfying their clients, satisfying the customers, so which can reward them long term. But with the high to sale price ratio, I would say, is very cautious. Me personally, I would personally not maybe buy. I would say I'm putting them in my shopping cart, which is my watch list, but I'm maybe not buying. But if you're seriously interested in buying them, I would just maybe wait until there's a pullback, right? Right now, I feel that people are just rushing around to buy stocks and to kind of get value long term. I would wait until maybe it goes below his 30s or below even his IPO to maybe just grab some shares, because like the company said, they don't mind about the share price because they're focused long term, right? So I mean, if you get maybe in the 20s or in the teens, I mean, why not, right? Add them into your portfolio because you are focused like them in long term. And I think it could be really rewarding because people are moving more and more online and buying stuff. So that's about it for this video. You know what? Drop a comment down below. I would love to hear from you guys on thoughts, like what are you buying? What do you guys think about this IPO and stuff like that? Would love to know about you, know about your opinion. If you like the video, hit the thumbs up, subscribe, and also share. Share with people, your friends or families that might find it very interesting. Would love to hear. Awesome to share with them. And also now, as always, 2 links in the description, one for the Facebook and one for Twitter. Would love to have you guys there. So thank you very much for watching, and have yourself a wonderful day. Whoosh!